People's Bank of China had weakened the yuan this morning by 0.9%. It was the single largest move in 2 years. Now, this was tied to market prices, but when you hear comments like that from the president, what's your reaction?
Well, there's been a lot of discussion about whether the president should or should not have expressed his views on monetary policy and how damaging it might be to have the president do this. I'd ask the question, what good does it do? How does that help the American consumer? How does that help the average family? And in the end, I think that becomes the central question about the way the president formulates both the trade issue and the monetary policy issue. He is focused on these bilateral trade deficits. The focus should be on the welfare of the American family. The economy is growing rapidly. Monetary policy essentially has zero real interest rates at the low end, 1% at the 30-year rate. So it's not inappropriately high, and you want to have the Fed doing the things that are best over the long term. And so I think he should have stayed out of it. I'm firmly in Steve Leisman's camp on this. I am old school, and presidents shouldn't talk about the Fed. But I think people are framing it wrong when they say, oh, he hasn't done that much damage. How's he helping?
And Jason, to that point, I mean, it seems like with the president breaking from tradition and making these comments about monetary tightening and the Fed chairman, that it's almost a darned if you do, darned if you don't scenario where the Fed is concerned in terms of the policy they implement this year and beyond.
Yeah, I agree with everything Doug said. I don't think this is going to move the Fed at all. The markets don't think this is going to move the Fed at all. Fed funds futures were basically unchanged on this. That's a building that, they don't have every latest tweet on their screens. They're looking at the data. They're a bunch of non-partisan technical experts. So I think they're going to do the right thing. Maybe they'll need to prove to him by doing an extra hike, but I don't even think they'll do that. I think they'll ignore this and tune it out, as they should.
What's the right thing?
I think, Jason, actually, I think. So just, I'm sorry to interrupt, but I think in the interview there were, in the past couple of days, there have been two things that they've done. The president singled out the Fed, and I think it makes them more likely to move in September, not less. And they singled out President Xi as the problem with China, and I think it makes him less likely to change course too. And so I think he's hurting his objectives by making these comments.
I agree on President Xi, because China has its politics too, and none of these leaders can be seen to just massively caving to the United States, especially when our demand is the wrong demand. It shouldn't be about the trade balance.
All right, Doug, multinationals might applaud the relief they're getting in the dollar if it's sustained. That would be one thing. The other is that doesn't it show at least some tip of the hat to the deficits that are admittedly result of the tax cuts, but at least he's got his eye on that.
I don't think he's got anything like an eye on the deficit, to be honest. I mean, the OMB, believe it or not, put out the
literally says debt's coming due.
But he's not doing anything about the deficit. There's nothing in the administration's near or long-term economic policies that suggest they care about the deficit. And so I find, this sort of one-off picking up the currency today, interest rates the next day, that's not a coherent economic policy. These tariffs don't fit into anything like a coherent economic policy. If he goes on $500 billion of Chinese imports, that's $100 billion. If we said, let's have a $100 billion tax increase, it would be rejected out of hand. If you label it a tariff increase, somehow it's good economic policy. None of this hangs together for me in any deep way.
And Jason, I want to ask you about that. When it comes to tariffs and this possible $500 billion more on Chinese imports, the question maybe isn't who this hurts more, but whether this is going to make things better. What reason do we have to believe that this strategy versus China is going to get us to a better place? Is there a historical precedent that you can point to, particularly when it comes to dealing with somebody like China?
Look, I think if we succeeded in the correct objective with China of dealing with issues like intellectual property and how our companies are treated there, it would be a positive for the U.S. economy. I think it's worth trying to do that, but I think it would be a relatively small positive. It's not going to make a huge difference to our jobs, our wages, and our growth. If we do the wrong thing and mess up a trade war, it could make a huge difference, and it could make a huge difference in the negative. So I think we're playing with fire here. There's a small upside, a big downside. I'd rather not see us even try to go down this path at this point with this administration and this strategy.
Just to wrap this up, Doug, in light of that, I mean, we've certainly seen it with markets. I know Bob Pisani, our own Bob Pisani, has reported on this a lot. The fact that we can even sit here and essentially level a trade war, level tariffs, have this fight now is because the U.S. economy is growing as strong as it is. You've got the tax reform, deregulation, and that is, at least from a market standpoint, net positive versus what we're seeing play out with trade. Is that not the case?
I think that's absolutely the case. I think the regulatory moves, the tax reforms are all incredibly powerful economic policy. They were the right thing to do. I am firmly supportive of that. The real question on the trade issue is, when will the administration demonstrate a win? When will they use tariffs in a way that cause other countries to lower their tariffs and end up net better off for the trading regime? That's always been the stated case. There's just no evidence it's going to work so far.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.